Hi, everyone, and welcome to another global edition of the Banking on Innovation podcast. I'm so pleased to announce our latest guest. It's David Brear. David is one of the most recognized and influential people in financial services globally. He's the founder and CEO of 11FS, a global digital innovation consulting firm known for its innovative digital strategies as well as venture launches. In fact, 11FS has launched 12 challenger bank propositions over the past 7 years. And he's the host of Fintech Insider, which I believe, David, has about 35 million downloads, which is a few more million than Banking on Innovation. But we're working our way up to it with guests like you.
Very cool. I think we started with zero. Everybody starts with zero, but you've probably come a lot quicker way than we did in a short period of time. So yeah, it's awesome. Thanks for having me on.
So starting with zero, tell us, how did you start your Fintech Insider podcast?
Yeah, I mean there was a few sort of origin stories really. I mean we were very lucky having previously run Gartner's digital banking capability. We were really lucky at the beginning of 11FS's journey to have just incredibly compelling conversations with people. And being big fintech nerds, we sort of felt like other people should be able to hear those stories as well. Whether we're chatting to regulators or CEOs of banks or whatever. But the last point where we were like, we talked about it for a little bit, and then actually it was a conversation. Bizarrely, I'd been over to Nairobi and to talk at a fintech conference, and having done the bit and headed for the taxi to get home, I shared it with a guy who I'd only really seen on stage, but not never really sort of known until then. A guy called Neil Cross, who was the CIO at DBS Bank. He'd absolutely torn up a keynote, a great conversation about how they do innovation and all the things. And yeah, I think we'd both had a couple of beers, and an hour turned into an hour and a half in traffic in Nairobi, and it was just such a great conversation that I was like, we're going to do this, like we're going to start it when we go back. So yeah, one thing led to another. I think I was pretty much terrible for the first 20 to 25 of them, and we slowly got better and better and better, but practice makes perfect, doesn't it?
Oh, so there's still hope for the Banking on Innovation podcast. I can still get better, better guests, better dialogue. Awesome. Well, let's start here. But make this day zero. So, David, it's really amazing to have you on the show. You've got such a global perspective. You engage with leading banks around the world to develop challenger banks, but also transform the institutional bank as well. Since you've got this global perspective, perhaps you can share for the audience, what are some of the common challenges that are being faced in the banking industry in different markets globally, and which markets have more unique challenges that impact the way they compete?
Yeah, it's an interesting one, and actually, look, we've been very lucky to work in most places. We've built things in the UK and the US and Saudi and Singapore, Hong Kong. The problems are pretty consistent, if I'm honest with you. I think every organization in every geography always likes to think they're kind of a little bit of a snowflake with regards to oh, we're so different, or nobody does this thing but really the banks are all wrestling with pretty much the same core issues. We've got how to modernize legacy infrastructure, how to stay relevant in an increasingly digital world, and how to really meet ever evolving customer expectations. We're finding people in industries far better than banking are now meeting people within banking's needs, and that's a real problem. When you look at the regulatory climate, whether it's HKMA in Hong Kong, or Monetary Authority in Singapore, or the Fed over in the US, or a plethora of different state regulators, then regulations are a really big part of that. And actually, it really sort of sharpens each market quite dramatically in terms of the things that people can do and the ways that people can be innovative. We found some regulators, say they want to be innovative, and then you end up explaining to them what cloud infrastructure is, whereas others are working within it and are kind of getting their hands dirty to sort of change the agenda, to change the market. But I think if you look at the UK and Europe more broadly, I mean, open banking's been a sort of a mega trend when you see what's happening there, and probably the knock on of that with everything that we've seen with embedded finance. But equally, the shift that we've seen from actually, goodness, having done this for 15, 20 years within financial services, you start to see actually quite fundamentally the competitive landscape shifting. Actually, having all of these players in the market, whether it's markets like Brazil or whether it's markets like the UK or the US, actually, the new pups coming into this market and applying pressure on those big incumbent organizations is really just the most amazing thing to see happen. And the ripples of that, really the customer experience is getting better and better.
Yeah, along those lines, we've witnessed continued expansion of the challenger digital banks in multiple markets, UK, Europe. You mentioned Brazil, which probably has one of the most successful digital banks, and in the US. And you've assisted on some of these efforts. How do you see the approach for digital banks evolving in terms of both their tactics as well as their strategies to gain penetration, share, and profitability?
Yeah, it's an interesting one that over the last 8 years of 11FS, we've seen every kind of accusation thrown at those challenger banks in the mix. We've seen big banks saying they'll never get a banking license, or they'll never acquire customers, or and you start seeing people like Revolut getting full charters. You see Monzo getting 10, 11 million customers. And the last sort of bastion of pushing back on whether disruption was really happening was profitability. But actually, we're seeing more and more big fintech players hitting that profitable space. I think it's a really interesting one. I mean, again, fintech's got an exciting label, and everybody gets very frothy over it being a thing. But this is just the cycle that banks went through. Like actually, no big bank. If you look at JP Morgan wasn't doing all the things that it does today when it was when it was created 150, 200 years or whatever. Like, HSBC wasn't HSBC. It was when it was just doing shipping stuff, So I kind of feel like the opportunity to do more things is always and forever, whether it's financial services or any other industry, is predicated on doing well. Like if you do well and you succeed on solving a problem for a customer, it's likely you're going to get asked or be given the opportunity to solve more problems. So, where we've seen the beachhead for many of these fintech players being, monolithic, there's the argument as always is, is it a feature? Is it a product? Is it a business? Actually, most of the fintechs that we've seen come to the market, even in, the last 10 years that have scaled, have probably been products rather than businesses. And it needs them to actually become much more sophisticated in terms of the services that they're offering to customers, and also getting the economies of scale of having large customer bases with cross sale and upsell capability, acting a little bit more like the traditional banks, the traditional operators, in order to be fully fledged businesses, and that's kind of what we're seeing. You reference Nubank. It really helps when you've got a geo with a huge population. I think what have they got, 75 million or something? That's twice the size of the UK in totality. That's kind of crazy, right? So, but across the US, across Asia, across Europe, we're seeing the fintech players get to real scale. They have disrupted the market fundamentally, and that's not just because what they've done to the customer, but actually fundamentally what they've mean for the traditional players, really having to pull their socks up and understand what good customer experience really looks like.
Yeah, and it's really a classic case of market disruption, right? Where you have an incumbent with strong position share and challengers that are looking for specific profit pools to start with. And those profit pools can be defined by some lack of either value exchange, where there's the customer isn't seeing the right value, or let's say it's complicated process excellence in terms of its process execution, or difficult processes for the customers to undertake, or let's call it opaque, some aspect of opaqueness of their business model, for instance, opaque pricing. And challenger banks have really identified what is that profit pool that's being underserved or not well served, and then that allows them to really expand, as you said, by adding in other services, products, starting to now look more like a full-fledged offering. In fact, trying to trying to earn even the primacy relationship, going beyond just profit pool of a single product.
Yeah, I mean, we always say it's underserved, overcharged, or overwhelmed. Like, actually, fintechs are predominantly aiming at those
Well
three
said.
areas.
Yeah.
I actually think the answer is much simpler than that, though, which is uh, banks kind of screwed up. Like, and actually, I think there's only even remotely an opportunity for any fintech in any market because opportunity was left on the table. And if you understand what I mean by that, I mean, for all of the reasons that you just said, why fintechs are being successful in any market, whether it's a payments one or a SME one or a retail account, retail banking side of things, it's because of the things that you describe. It's because that they solve a real problem. It's because actually they're providing a more personalized, more engaging experience. Uh, no big bank on the planet started their digital transformation program for those reasons. They did it to take people out of the process. They did it to take paper out of the process, not having to send statements, even taking physical buildings out by shutting branches down. So digital fundamentally, at the if we go back to 2010, maybe 2012, it was being invested in to save money, not to increase the experiences and make things better. And we actually see this in lots of other industries. You sort of see people who have got a kind of an incentive in maintaining the status quo. Their investments become skewed because of how they budget. And this is exactly what happened to every big bank around the world. If your focus is on cost saving rather than creating really compelling experiences for people, you get what we got, which is fundamentally self-service all around the world. And actually that doesn't really work for all of the reasons that you say. If you've got an industry that is painfully obfuscating the language that it uses in order to be able to charge fees and pieces for things, that's not a good place to be if you start making people do it themselves. Arguably, we've got the biggest financial education crisis around the entirety of the world. But at the same time, we've got interfaces that are being given to people to, basically be their own financial advisors, which just seems like a hard rub, doesn't it? So for the fintechs coming into this space, it's a pretty low bar. Like, actually, can you provide something that's compelling? Can you really solve a problem? Can you save people time and make people money? And I think with those different agendas, fundamentally fintechs are coming to a really different place. And I would add to that as well is the things that they're doing is only really the absolute tip of the iceberg. The way in which they're doing them, I think, is much more of a fundamental. And I think we could probably talk for about 10 hours more on what that means. But when you look at their operating models, when you look at the technology that's deployed, when you look at the speed of change, the connectivity that they've got with their customer, it's a fundamentally different game that they're playing.
Let's layer on top of that now the advent and frankly the acceleration of AI, and along with it has come the byproduct of accelerated pace of change. How do you feel that this has impacted the industry overall, and what do you think banks need to be doing differently? Let's start with the traditional banks.
Yeah, I think it's an interesting one. And do you mean specifically with regards to like the impact of AI, or because actually, I mean, again, it's a funny one. When you look at the UK market, I mean, we've got the regulator coming out just this week and going, hey, banks, do more AI stuff. But actually, like in the reality, I'm not sure I know kind of really what that means, because it's not like banks have not been embracing technology. Banks have been pretty good at doing that over the years, whether it's been chip and pin or whether it's been, the advent of, secure capabilities for doing internet banking anywhere you are, So actually, banks are not bad. I mean, even cash, like I'm going back quite a long way, but cash was a pretty decent invention in terms of being able to, exchange this little bit of paper and know that it was good for what it actually said it was. So, technology in banking is not really a new thing. And really, AI in banking is not really a new thing. People have been using, machine learning. They've been using, narrow artificial intelligence for risk-based processes or across all the different types of
Sure.
things. People have been using robotic process automation to make sure that actually they can piece together different data sets or disparate monolithic technology structures. So this is not new. I think it's almost, and we say digital banking is 1% finished. Like that's our our kind of mindset mantra. And we say that not because we're having a go at anybody. We do often, we'll go into a bank and they go like, so we've spent like a couple of billion quid. You're telling us we're only 1% finished, and I'm like, we're not having a go. What we're saying is like, if you fundamentally believe that actually the industry is always changing, and customers' needs are always changing, and fundamentally that actually the environment that financial services organizations operate in is always pushing forward, always falling forwards, as we say, then really sort of adapting to that environmental changes that you're operating in is just sort of part of being a big business. So for us, banks and AI is just like banks and distributed ledger technology, or banks and the internet, like, or banks. And like, what will happen for a couple of years is everybody's going to have an AI strategy until they feel like they understand it enough to go, okay, here's the hype stuff and here's the bits where it can really actually help customers, and this is what we need to know now, and start deploying it against real customer problems. And then the flurry of activity will die down again. I think the thing that's interesting with AI, and in a similar instance to the excitement everybody was getting into 3 4 5 years ago with distributed ledger technology, is fundamentally it has the potential to change kind of almost anything it touches. Actually the ability to communicate through an interface in the way that a customer wants to engage with it. The fact that you can ask it to explain to you compound interest in the style of an 8-year-old, or or create a podcast for two people off the back of a PDF that you send it. Being able to really fulfill on the promise of where we wanted to get to with the internet, which wasn't sort of one size fits nobody technology, but fundamentally building infrastructure and building interfaces around individuals. For me, that is where I get really excited. All of the back officey stuff of like making things quicker, making things easier, bridging data, sure, that's great. But fundamentally going from not just self-service capability, but fundamentally taking actions and making things happen for the customers, that's where I'm really excited. Bizarrely, it's actually unlocking the ability to go back to kind of a little bit more traditional values of financial services. Actually, the guys in a branch who would be very empathetic and really be able to break down financial terms for you and understand your problems, and be able to talk to you whenever you needed to talk to somebody. This is the type of interface that we're actually being able to create right now. And for me, as a sort of a designer in a way that the designers at 11FS wouldn't even remotely recognize as a designer, that's the type of thing that really excites me.
I really appreciate the term unlock. We also reference that term because we believe strongly that the industry, the banking industry, has yet to unleash its creativity to help solve customer problems. But when you do have advanced data and analytics, and you're able to anticipate particular issues before they occur, not reacting to them, then you can unlock the creativity of the institution. Meaning, if for instance, I can help a customer anticipate that they may have a cash flow in 10 days, I can unlock the panoply of solutions that I may have that are uniquely suited to that particular customer and their financial needs, and I can start to act on those, as opposed to discussing whether they should have been received an overdraft fee or not, and going through the operational costs of ameliorating that condition.
Yeah. And how much does that change the dynamic, right? How does that change the relationship with the customer? If you're there to provide them it's funny, we say this is like the net, it was kind of obvious in staring us in the face all along. The industry is called financial services. The service is really important. It's not called financial products industry, it's called the financial services industry, right? So providing a great level of service, you want to be a great waiter rather than a bad landlord. You don't want to knock on the door when something's wrong. You want to be, providing engagement and providing opportunity. And that example that you've got of, how much better a relationship do you have with your customers when you're pointing things out ahead of time to help them. And in the world that we live in, with digital being a 24/7 thing, and the real time sort of intelligent nature of the things that we can actually deliver to people, actually the trust that fosters for relationships is so much greater than just being the dumb terminal on the wall, or the building that's 10 blocks away, or it builds to be something much more democratizing than that example. If you extrapolate it out, this is private banking for the mass market. It's the things that would have happened if somebody was looking at your banking 10-15 years ago, but actually digital, and whether it's AI, whether it's just basic triggers off data, actually these things can change the relationship of customers so dramatically.
Yeah, so exciting to think about. Along those lines, we've introduced the notion of cognitive banking. So, David, share from your perspective, what does this mean to you, and why is this important for the industry?
Yeah, I love the concept. And actually, it speaks a little bit to some of the stuff that we've just been talking about, but actually, like what I've been talking about for 4 or 5 years now, which is it really feels like it's like that next evolutionary step. Going from this digitized world where we've got websites, and you can go do self-service things, to fundamentally actually that next evolutionary view. It is cognitive banking for me. It's about creating a banking experience that is digital, but is what we call truly digital. It's intelligent. You're using data to not just react to what it is that's happened, react after the event, as you say, to a person going overdrawn and, hitting into their overdraft, but doing that real time engagement to really cater the service around people. I think it's an important one as well, because fundamentally, and if anybody's listening to a banking podcast right now, we're all a bit weird. Like, we're not normal people. Like, no normal person goes, yeah, for my free time, I'm going to listen to a podcast about banking. Like, normal customers don't care about this stuff, right? So nobody wants to do banking. They fundamentally just want what banking actually gives them. They want the outcome. They don't want the products. Nobody cares about a checking account or a credit card or whatever. They want to buy a thing, or they want to be able to pay their mortgage, right? So for me, the simplistic thing around cognitive is people actually thinking about the level of service that they're offering to a customer, and just by the nature of feeding it with great data and thinking about the service we really want to offer, then actually it feels like we can make much more effortless banking.
Well, thanks, David. You just ruined my narrative to have my kids listen to my podcast. Now I don't know what to tell them. But let's talk more about that from the customer perspective. How does it look and feel to the end customer?
Yeah, I think for me the difference, and it's difficult. I think we can describe functionality. We can describe the sure, a push notification to you to say, hey, we've noticed tomorrow you're going to go overdrawn, and but I think there's sort of a coldness in isolating functionality in itself. How does that make you feel as a customer? I think is a different thing, and quite a difficult one to describe, because like I say, I think we're describing what does trust feel like, and actually, I think the challenge that, and this is really where you sort of get into an interesting dichotomy between the banks and the fintechs, which is, I think people trust, fintechs and banks for different things, and I'd say people trust fintechs to probably have their best interests in mind, and that's shown in the things that they do and the services, the way that they break down topics and talk to people. Fundamentally, I think they trust big banks just not to run off with all their money. And that's a difficult place to be, isn't it? Because if actually what you're trusted for as a big banking organization is to still exist and not disappear with people's money, that's a pretty tenuous strain of the word trust, isn't it? So for me, this concept, the cognitive banking idea, and whether it's the ability to understand where you've got slush funds to move in to pay overdrafts, or whether it's identifying a behavior in transactional things that give you context of where people are or what they've been doing, then fundamentally for me it's again back to that services piece. How do we collectively deliver intelligent digital services which make people better off? And I think this is a really, really good start.
Yeah. It talks about almost being a more intelligent enterprise where customers' explicit needs, of course, are understood. And I think the industry has done a very good job of asking customers, particularly during account opening or when they're in a branch, tell us about your priorities and the, the financial relationships you may have and capturing all that. But what's really more profound is the implicit needs that customers may not express to you, and frankly, they may not even know because it's happening. For instance, they've got an extra $5,000 they can put away, more than enough to cover their expenses. So, and I've already got a savings account. So let's now look at the next step, which is opening up a discount brokerage. So these uncovering these implicit needs and acting on them. So for a bank to really, let's say, operationalize that in a way that's customer focused, that activates all their channels, where they're looking beyond just a product construct to this is a customer that's in this situation. So how can I support them? It's a broad task, but what do you see as some of the processes and structures or even product mechanisms? How may that need to change to be able to fully capitalize on this notion of cognitive banking?
Yeah, I mean it's a difficult one, isn't it? I mean, and actually, if you look at why it's a difficult one for organizations, it's difficult because of fundamentally how they're structured. Like most big banks around the entirety of the world are monolithically structured. You know, they've got a savings team that has a savings technology platform that sits in with a sales team that is incentivized by selling savings accounts, right? And you know, mortgages and current accounts and credit cards and yada yada yada, right? So actually integrating those things, you know, integrating those monolithic silos to provide this type of intelligent service is an interesting challenge for them, not just from well, how do we make the technology do that, but fundamentally culturally, how do you make these things happen as well? But it starts with data. Like it's got to start with data. You know, if you don't have the real-time intelligent contextual information to allow these prompts, these interjections to the customer to be created, then they're never going to get to the level of intelligence that you really need to do it. But you know, breaking down those silos across those data points is then probably the next challenge. But I think probably having an understanding, being able to point to a problem, is like phase one. But phase two really is about doing something with it. You know, it's not just good enough, as you said a little bit earlier on, to retrospective. Nobody likes that friend who's like, yeah, I told you shouldn't have done that. That's not helpful. Like, tell me before the problem happens, right? So moving much more to automation at that stage, where you know manual workflows are being turned into much more intelligent structures. That feels like probably the next stage of it. I think the most fundamental, and you know we touched on it a second ago, is the cultural side. Like if you are mentally moving from an organization that is just thinking about distribution of analog products to the provision of these types of intelligent services, then fundamentally the culture that's needed within organizations to make those things happen is quite dramatically different. I myself, I worked at a big bank for 6 years in the UK. If you ever want to know what the most adrenaline themed theme park ride ever was, joining a bank in 2008, just before the financial crisis kicked off, was pretty entertaining. I have to say, it was a definite roller coaster. But even just getting conceptually into actually, you know, how you display information, how you engage with people. You know, the old idea that marketeers break everything. So actually, the overuse of different prompts or different banners only to sell products only turns people off. And actually, the way in which you engage with people and drive loyalty, drive trust, and actually even drive fundamentally NPS is not by just shoving products down people's throats, but fundamentally by showing them and engaging with them on the wide range of things that you're doing, even if it's not good for them knowing you're doing good for the community, or you're doing good for people, for products that might not meet their needs. It all changes the feeling that they have towards you as a brand, as an organization. We used to have at Lloyd's kind of a rule of thumb, which was Only 1 in every 11 messages could be a sales message. And we did that very purposely to be in a situation where we were reinforcing all of the reasons that somebody's chose to do business with you. They've got choices, they've got options. So why you over everybody else? And highlighting things that we were doing for charities, or even highlighting pieces of functionality that they don't benefit from directly themselves, all shows a much more vibrant organization. So when they are ready and they do identify a need, then actually they're much more likely to choose you at that point as well.
Such an important point, which is to balance the range and the type of interactions you have with customers, so that there's a mix of, we are looking out for you by showing you, these are things you should be alerted to, or here's content that's relevant for some situation you may be facing, or as you said, things we're doing in the community. And for those times and those interactions where there is a sale that's being made, whether it's a sale in terms of adopting a new product, or a sale of, you would be in a better product. You already have one, but you should be in a different product. Really starting to show customers why that's the right interaction for them. So, such an important point to have that mix of interactions, as opposed to a campaign management engine that's just doing, next best offer, one after the other.
Definitely. Yeah, it's an interesting challenge to get that cultural piece set up correctly, but fundamentally it's a force multiplier for everything else. You can have all of the pieces in place, but actually if you don't break down those barriers to allow the type of service you want to deliver to the customer possible, then it will always be like driving with the handbrake on.
Yeah. You referenced before around the traditional product oriented construct that banks have enjoyed for many years. It's made things quite simple in terms of the checking team and the lending team and cards team. With the advancements in data analytics and customer understanding, how do you think this interaction and the relationship with customers may evolve in a different way?
I think fundamentally, I go back to my example earlier on, and not to further put your kids off from listening to the podcast, but nobody wants to do banking, right? What my ideal scenario would be, and actually, if you take the sort of cognitive trend of using data, seeing what people really do, as you described earlier on, rather than just what they say, and sort of plot that out. I mean, fundamentally, we've got cars that drive themselves now, but I'm still getting stung for an overdraft charge from my bank if I've got money in my savings account. Like, that makes no sense at all, right? So I think it starts with pointing things out ahead of time. It starts with helping people try to avoid problems before problems occur. But beyond that, I actually think there's the ability to go into more self-driving money. I think arguably if you move this forwards, and if you sort of contemplate from a retail perspective, we're talking about the democratization of private banking. It's people who will do things on your behalf in order to save you time and make you money. So I actually think banking has both a great potential, but also a pretty scary potential if you think about what it could mean of becoming much more of a background process. It isn't core to anybody's life. That it is fundamental to making those things happen. Don't get me wrong. We've all got mortgages, we've all got credit cards, we've all got things we've got to spend money on. But actually, those things dropping back into the background because the organization that you trust to work on your behalf, I think is probably the direction of travel. And for me, I think that would be a great thing, because for those organizations that start to invest in being really relevant to customers' problems and building trust in those systems, who are you going to trust to do that? The bank that shows repeatedly that they don't understand you and don't understand your family or your problems or your needs, or fundamentally the one that understands you and starts anticipating what those needs are and more actively helps them manage their finances. Like, I know which one I'd prefer to work with, but I think people will start voting with their feet on that pretty quickly.
You were just alluding to this, but perhaps you can expound. How do you see this notion of cognitive banking changing the way that banks say, sell products, retain customers, and do it in a more effective way? How do you see that evolving?
Yeah, I think for me, I think it's um, the industry has done a really bad job at basically commoditizing itself for a long time. Actually, if all you're pushing to people is your rates and your product features, all people will differentiate you between you and your closest competitors on is your product features and your product terms. So, and that doesn't make any sense. Like, because actually, all that leads to is a commodity product, which there's no industry that has really benefited from that. Not the telecommunications industry, not the car manufacturing industry. Any time you focus purely on price and product features, it's a bit of a downward spiral. Whereas actually, if you focus much more on, as I said a second ago, relevancy and trust to customers' problems, then you're starting from a completely different way. Like, you're much more likely to stick with those organizations. Those sort of personalized insights are much more likely to lead to much greater engagement from those customers. And fundamentally, better engagement leads to much higher retention and new product adoption. I mean, who are you going to do the work with? Like, the one that you trust or the one that you don't trust? Like, it just becomes such a no-brainer. So, but again, I think it's because the industry's been so fixated on creating self-service portals of my statement on a website and my website on a tiny little screen on somebody's mobile phone, that they've just lost a little bit of sight on actually what is it that customers want. Like, fundamentally, they want help. They want people to anticipate their needs. They want people to show that they understand them. So actually, once you do those things, I mean, what if somebody gave you some advice and you didn't trust them? What's the first thing you're going to do? You're going to go and look and check what they said and do some research and look. So if all you're doing all the time is pushing, a product on somebody, and you've not built the time to fundamentally build a relationship or build trust with them, actually quite often what you're going to do is push them into another provider's hands. So building trust, and I don't mean like, I'm not sort of Mr. Burns' hands evil villain type, build trust with customers. Like, I mean it like, if you actually build a great relationship with people, your business will do better because people will have more products with you. And that's not like fake having relationships with people. It's like, use the data, use what they're showing you and telling you, provide much better, think about what your service you're going to provide to them, be cognitive about the level of engagement, the level of trust, the level of relationship you want, and then good things come from that. And it's funny because it sounds just so bloody obvious when you say it out loud, but actually it's really what's been missing from the industry for a decade.
Great things to aspire to. So let's end with this, David, which is, what do you think customers will expect from the banking industry in the next 3 to 5 years, for which the industry is not well prepared?
Yeah, I think if it goes to that, when that cloaking device drops down and, banking becomes truly invisible, like, what does that mean? Like, how does that work? Like, how, when you're predicting and proactive to customers' problems, then the level of tolerance that anybody's going to have to any level of friction that an organization is putting into it is going to be zero, right? So they're not going to expect that from other organizations, and they sure as hell aren't going to be expecting it from financial institutions. So right now, most banks are not ready for this. I think they're still playing catch up with many of their digital transformation agendas that have been going on for, everybody's got a 1 billion core banking transformation that they're trying to put right, or a ridiculous chasing of the next technology innovation. But fundamentally, if they get to a point where they're really trying to add value, where they're really trying to proactively engage with their customers to make their lives better off, then that's going to be a real big thing. I guess the winners are going to be the ones that fundamentally recognize this shift and move now, not in the next 5-10 years, but the what's this saying, the best time to plant a tree is either 30 years ago or today. The best time to really get together on your digital transformation is right now, because you sure as hell didn't do it 30 years ago. So start today.
Yeah, well, good, good motivation to act. David, you've given us some great things to think about, things to aspire to achieve, also some challenges that need to be overcome, but I think mainly the case for action to act now. So thank you so much for sharing your perspective. I know the audience really appreciates it, and it's amazing what you've accomplished, and I appreciate how you're helping to move the industry forward.
No worries at all. As we say about the industry, we say about us as well. We're only 1% finished, so we've got a lot more fun things to do coming forward as well.
There you go. I'll look forward to working alongside with you in making the rest happen. So, David, thank you so much.
No problem at all.
Thank you for joining another episode of Banking on Innovation. Make sure you subscribe to get future podcast episodes. Please follow us on LinkedIn and at personetics.com.